morning, everybody. Welcome back to the Everyday Growth Advisors live stream, the webinar series. I hope you guys are having a good morning here. Welcome back to another webinar, which will hopefully help you guys out. You know what we do here, education is the name, and we are playing the game. I should really get into rapping, huh? No, I'm just kidding. I can't rap for shit. Good morning, good morning. I hope you guys are, having your coffee, having your bagel, maybe some Captain Crunch. Oh boy, how much I miss Captain Crunch. I want some Captain Crunch. Can somebody send me some Captain Crunch from America, please? I am craving for it. Today we are going to go through a live webinar on how to build a trading journal / calculator. I've built one in the past, and I'm going to show you what I've built. And then on top of that, you can, of course, take a look at another kind of thing that we will build together. Of course, I was thinking maybe I should build one and then show you guys, but then it wouldn't be fun if that happened, right? I should build it with you guys, and that way, you can see what you need and what you don't need, okay? But I will show you one that I've already built, which is the trading journal / risk to reward calculator. And then we'll build another one today together, that will maybe be a bit easier for you guys. Now, the main focus of this webinar is not just building the calculator, but I feel like not many people know how to use Excel, or you don't really know the power of Excel. And I think this stream, this webinar, you should concentrate on learning these Excel skills. Excel is a very powerful tool to learn, and at EGA we don't just focus on learning trading related things. We focus on learning things that will just overall make you a better, more versatile person in your job, in wherever that you do what you do. Okay, so you might be just doing a regular job, but Excel can come in very handy to automate a lot of processes. And so I want to show you some tips and tricks. Now, I'm not like an expert at Excel, but I like to think that through my career being a financial analyst for a utility company and doing lots of Excel sheets through my career, I felt like I've learned a couple of things. Now, we're not going to do any crazy data manipulation. We're not doing any VLOOKUP functions. We're not doing any crazy things that require you to do any macros or such, but we're just going to do simple formulas, things that you might not have been aware of. Okay, so let us start with first looking at this trade planner that I've built before. Okay, and this one is a simple one that I built for the Everyday Growth Advisors mentorship program. And you know what, I don't think like, we need to like keep this like a secret Excel sheet, or like that I can't share this out. Now, if you want access to this Excel sheet, let me know and I'll make it available somehow. Maybe put it in a Google Drive and send the link out. Just hit me up in the DMs, give me your email address or something, and then I'll send it out to you. This is a fairly easy Excel sheet to use that helps you to plan your trades based on your risk and reward. Okay, so I hope that it helps you out. So for this one, specifically, let's say you're thinking about Amazon here as a trade, right? Just as an example, and maybe you're wondering if you enter Amazon at $3,083, and you keep your stop loss somewhere here at 2,900-ish, which is below your support here, right? You don't want to put it here because then you get stopped out by a market maker. Maybe you put it further down here somewhere. So maybe you start off at 3,080. This is where you want to enter Amazon. So you start off, first of all, the only things that you need to populate are the ones that are colored. The rest populates for you. So we type the ticker there, right? We have our entry price at 3,080, right? And then we have our stop loss. And let's say our stop loss is at, what is this? 2,940, something like that. 2,940, right? And we plan a take profit at maybe around this resistance up here at 3,345, let's say. Well, now you can see whether this trade is actually worth it to take or not. Generally speaking, I have a conditional highlighting here to show you, if a trade is worth it to take or not. You should be aiming for at least a 1:2 risk to reward ratio for all your trades, because that keeps you profitable in the more number of trades that you take, right? If you have less than a 2, or well, technically speaking, if you have more than 1 risk to reward ratio, you should be okay. But basically, what is the risk to reward ratio? The risk to reward ratio is going to be, your 1 R distance over your required 2 R distance, and that's going to be basically, your main focus here to see if that will be equivalent to more than 1, right? You want that to be the case. For every trade that you take, you want the outlay of capital to be 1, while your reward is 2. That way, the more number of trades that you take, you gain more from that trade, okay? So here you can see from this trade, based on those values, it's not a very good trade. You have to move up or move down. You have to scale in your stop loss, or you have to change your entry point, right? So we know this is just a very quick way for you to just plug in a bit of numbers and get that sorted, right? Now, that's when you have a defined risk, okay? We'll call this defined risk, right? Well, you know what your risk is. It's an assigned risk, okay? But on this side, I have another trading calculator that takes into account the fact that you don't know what your risk levels are, and does that for you, okay? So how does that work? Well, this one's pretty simple. If, let's say, you think something's at all-time high, maybe, for example, KWeb, right? It's at all-time high here. You don't know how far this thing can run up, right? And you want to know where you should be putting your risk to reward ratios, right? You need to calculate that, but you don't know how to do it, right? Well, you could do a fib, you could do an extension, or you could do pre-assigned levels of a stop loss risk of 2.5% or a take profit of 5%, right? And you can have this set up in such a way that it's really fairly simple to get this sorted out. So let's say KWeb, right? And all we have to do here is put in the entry price, right? We just put $74.15. Let's just say, right? And this automatically adjusts your risk to reward ratio to 2, okay? So this one, it takes a risk of basically taking your stop loss at 0.975, which is a 2.5% risk. It take profit about 5% at $77, and it gives you the 1 R distance, the actual distance, and the required 2 R distance. So this always keeps your risk to reward ratio at 2, okay? It always will populate as 2 when you put in the perimeters, and the only 2 perimeters that you need to put in are these 2 right here, okay? So here, that's a little thing for you. Now, how do you set this up? So I just wanted to explain how it works first, and then now we can talk about how it's set up. So simple formulas, right? First, these are your entry, your inputs, right? And your output here is your 1 R distance. What is your 1 R distance? It's simply your entry price minus your stop loss. That's the risk that you take on, right? This is your risk. This is the risk you take on for the trade, right? Your actual distance is going to be the distance, which is your take profit to your entry price, right? That's your the distance between your the price that you entered and your profit range, right? So as simple as that. Your risk to reward ratio is going to be your the actual distance divided by the risk that you take on, right? Your profit over your risk. This gives you a risk to reward ratio, right? Pretty simple, right? So this divided by this gives you this. And then the required 2 R distance is simply going to be your 1 R distance times 2, right? It's going to be 1 R times 2, right? So simple formulas. You don't need to do hocus pocus here, okay? This is not, you don't require any rocket science to make these sheets, okay? It's simple logic. Now here I have, obviously, another person pointed out during the mentorship course that, I should add in a if error, so that if it actually shows 0, or it shows a 0 denominator, then it should equal to 0. So I went ahead and put that in there, and then all you got to do is just drag this down, right? Whenever you put something new, you can just drag the formulas in, and it'll populate for you. Over on this side, it's a little different, right? We have the ticker, you have the entry price, and then from here, you have the entry price multiplied by less 2.5%. So 2.5% is equivalent to 0.025. And so 1 minus 0.025 is 0.975. And so therefore, your risk is adjusted to 2.5%, which is 0.975, right? And that gives you your stop loss at 2.5%. You could also amend this to whatever you like, right? If you want a strictly 2% risk, you can make this 0.98. If you want a 5% risk, you can make this 0.95, right? You get what I'm saying. You can do a bunch of different things, right? So I have it at 0.975, and that gives you your stop loss at 2.5%, okay? Now, the take profit here will be simply your entry price multiplied by 1.05, right? Because you want 5% above where your entry price was. And therefore, so you take your entry price at 74.15 and you multiply it by 0.05 more, that gives you 5% higher than where you were at your entry, right? Simple stuff, logic, right? Okay. And then on this side, your 1 hour distance, and by the way, all these values over here, I use absolute values so that you can see in the formula bar right here, right? I use absolute values. ABS is your symbol for absolute. And the reason why I do this is because if you're entering a short position, it's going to give you negative values. And so what you want for these values here, you want absolute values, you want them to be positive even when it's negative, you want that to be converted to a positive value. So you use an absolute value to basically fine tune the sheet a little bit and make sure that you don't have any errors, right? So over here, your 1 hour distance, once again, once you have your stop loss, you can deduct that from your take profit, your entry price, and you convert it to absolute value. Your actual distance here will be simply your entry price, your take profit minus your entry price, and then your risk reward ratio, once again, is going to be your actual distance divided by the 1 hour distance, right? And the required 2 hour distance will be your 1 hour distance times 2. Simple and easy, right? Now we can start to build our own, right? And so you can do a similar sheet like that. If you want, you can build it alongside me. And so what I usually start, I don't even concentrate on beautifying it right off the bat. Right off the bat, what you really want to do is, put in all your raw data, okay, the raw stuff. So what do you want? First of all, you want maybe a number, right? Trade number, right? Okay. And then we'll just expand that out so that, it'll always be that thing. And so, maybe this can be like your serial number, right? Oops. And you can press alternate and enter to go to the next line of that same box and go SN, right? Serial number. And we'll make that centered to the center there. And then the same for all of these here, right? Okay. There we go. Next, what do we want? We probably want the date, right? So maybe today's date, right? Or no, not today's date, but basically date of trade, right? You want something like that, right? And how would you, we'll get into the formulas later, but then we want maybe the ticker, right? And then we want maybe the entry price, right? And we'll take a couple of pages out of this book, right? So entry price, stop loss, take profit. Those are the basic things, right? Entry price, stop loss, and take profit, right? So this is how you would build out the basics of your stuff, right? You're basically putting in what are all the variables that I need to achieve this. Is everyone following along so far? Is everybody doing okay? And also, welcome into the stream, guys. Hope you guys are having a good morning. Make sure you smash the like button if you like this so far. I appreciate you guys taking the time out to be here. I hope this stream helps you guys out. And, if it does, give me some feedback. I would love to hear from you. Cool. So, going on here. So, you have your take profit, and then what else do you need, right? You need a whole bunch of stuff. You need possibly all of these, right? You need possibly all of these. And let's just copy these over, right? Okay, and then we can amend the formatting later, right? This, by the way, this is for your options, right? You can do one for stocks. You can do one, you know, for a bunch of different things, right? Also, you might want to add a column for commission paid, right? Because commissions can add up pretty quickly, right? Something like that. And all you do is hit Format Painter here, make them all the same. There we go. Okay. There we go. Perfect. There we go. All right. Cool, cool. Next, what do we need? We need maybe, this can double up as a trade journal, perhaps, right? So what can we do? We can have a P&L, right? P&L column. And maybe we can do a win rate, right? Well, for the win rate, it might be a bit sticky, but we'll add it in, and we'll work with it later. Maybe we'll move this over to this side first and do a P&L in percent first, right? Simply that will be this divided by this in a decimal form, right? And then let's see what else here. Yeah, so this should basically be pretty good for a, you know, entry-level trading journal, right? I think all of this stuff here should be good enough to really help you out with a proper journal. So how would you do this? First of all, 1, 2, 3, 1, 2, 3, 4, 5, and then, you know, this will drag down and, wait a minute. Oh, I know what I did wrong. So you can't take 5 and drag it down. You got to do 1, 2, 3, 4, 5, and then you drag it down, right? And then it goes 6, 7, 8. So Excel does that for you. If you highlight a bunch of cells and it has a, a pattern, Excel recognizes the pattern. Okay. Now, if you want the date of the trade and you want it to just pull today's date always, you can always do equals today and then open bracket, close bracket. That will always input the date of today. So whenever you put in this entry, let's say tomorrow, you drag this down, it'll change to today's date. So that's a neat little formula you can learn. Ticker, this would be entered, based on what you like. Now, another thing you can also do is ticker price, maybe. Ticker current price. Ticker current, and then price. You can do something like this, and then you can go equals Google. Finance. Google. Pretty sure they have a formula for this. Finance. Oh, did they take this out already? Oh man. Let me see what that is. I'm pretty sure they have Excel pull up ticker price formula. Pretty sure you can do this. I've done it before. I'm not going to spend too much time finding this, but there is a formula. Oh, web service. No, that was one that was like Google Finance last time. Maybe they've taken that away. Interesting. Okay, never mind. There used to be one. Never mind. Let's see. I'll figure that out later. It used to be. Oh, maybe it was Yahoo Finance. No, Finance. I swear it was possible last time. You could make it pull up the ticker that's here, the price of it right now. You could make it do that. Never mind. It's okay. It's okay, Google. It's okay. It's okay, Microsoft. They probably did that because of anti-compete, right? Okay, entry price. This you would so then you start. Okay, so this is the things you would have to fill up, right? Okay, this you would fill up. 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 Right. Your 1 hour distance. What would it be? It would simply be your your entry price minus your stop loss, right? That gives you your 1 hour distance. So let's say your entry price was 10, your stop loss is 5. Oh, what's oh, sorry. It should be here. 4. There we go. Right? And then let's say your take profits at 15. So we'll just play around with these values here for a while. Let's just say X, right? And we're going to format these to all be centralized. The actual distance would be your equals to your take profit minus your entry price, right? When I say actual distance, this means, let's just call it profit distance. Just easier that way, right? Simple formulas, right? They're nothing crazy so far, right? Okay. Your risk reward ratio, that's, wait, we're missing one column. So let's actually move this here and then move this here. There we go. Much better. Your required 2 hour distance is always going to be equals to your 1 hour distance times 2, right? Simple. And your risk to reward ratio is equals to your 2 hour distance divided by your 1 hour distance, right? Okay. Now, if you want to go an additional layer here, you could always, first of all these up to here, you can add decimal points to them, make them like 2 decimal places. Now, you can add a conditional formatting to this cell, right? And what you can do is you can tell Excel that if this number, okay, if this number is greater than 2, then you should fill this with a green something. Actually, they had it there. Let's just not complicate it. So green fill. There we go. Okay. If this cell is greater than 2, greater than, yeah, greater should have been probably greater than or equal to, greater than. So let's just do greater than 1.99 for now. I'm pretty sure. Yeah, there we go. We could have also done equal to. Oh, there we go. So actually, we could just amend that real quick. Clear formatting. Wait. Where is it? Okay, conditional formatting. And then we need to do one more, right? We need to do one more. Less than, no, equal to. Wait a minute. Here we go. Sorry. Let me just do this again. Equals to this divided by this. Yes. And then, oh, wait. How do I clear this? Clear rules. There we go. Okay. We're gonna. This is not gonna be the ones that I have. It's 3 rules actually. So first of all, when it's equal to 2, you gotta get it to fill up to green, right? Okay. When it's more than 2, it fills up with green, right? And then when it's less than 2, you fill up red. So now, if somehow, if your required 2 hour distance, we need to change this a little bit, right? Let's say your entry price is at 8. Okay, if your entry price is at 4, if your entry price is at, oh, because it's still a profit distance. Wait a minute. Oh, wait. This is 10. Oops. Okay. So then your 1 hour distance, this is correct, right? Everything's good here. This is good. This is good. This is good. And then you have these rules here. Okay, perfect. That's good. So you have 3 rules now. Okay? And these rules will follow as long as you pull down the tab. Okay? So if the cell is equivalent to 2, okay, it'll turn green. If the cell is more than 2, it'll turn green. If the cell is less than 2, it'll turn red. Okay, and so you can, this is applied to that cell, but you could bring this down. Okay, now in order to not get this error, what you do is you do a if error statement. Okay, and then you're gonna do this. Okay, oops, and what you do is this value. Oh, you have to do a double parentheses here, right? Because your formula is within the formula, and then a comma, and then a 0 here. So if everything is, if there is an error, show a 0. That's what this means. Okay, that's what this means. Instead of it showing a, weird divide by 0, it'll show a 0 when you add this formula, right? If there is an error for this formula, show 0. This is what the formula is saying. Okay, that's basically this formula. See, if error for this value, then what should be the value that you write there. So I just keep it as 0, right? Okay, simple. Oops. Okay, perfect. Now commission paid. This would be generally based on your broker, right? Based on your broker. Usually it's like I don't know, like based on the contracts you buy, right? So if you want to really make it fancy, what you can do is commission price, and then add in a commission price column here, right? Like for example, TD Ameritrade is what, 65 cents, right? 0.65, right? Oops. And then here you can do insert column. And what you can do here is number of contracts, right? And based on your number of contracts, let's say you have 2 contracts. Oops. Let's put a number here, right? This is going to be a number, general number. Let's say you have number contracts. So then commission paid would be your commission, and we're going to lock this cell in, right? It's always going to be the cell. We put a $ by locking it in, and we're going to multiply that by the number of contracts, right? Boom. That gives you your commission paid, right? And so this kind of like, now you're building out, right, what you need, right? Okay. Now your P&L is going to fluctuate a lot, so you would have to hard code this in, right? Your P&L percentage would be, well, you could also, okay, you can actually do all this. Hold on. So let's move these first of all. So ticker, entry price, stop loss, take profit. Let's just say this is for your planning phase, and then we say this is for your active trader phase, right? This side maybe can be your planning phase. And then here we can do active trader phase. So here we'll need a couple more boxes. I hope you guys are full in. I hope this is not too complicated. I'm trying to do my best here to really get this as simplified as possible. So here we go. So let's say we are looking at your contract price now, right? Okay, so contract price, right? And then let's say contract price, you have the number of contracts, so then you say capital used, right? Capital used, and then you would have your P&L, right? Okay, and then your P&L in percentage. Okay, cool. So contract price here, let's say your contract price was $4. Okay, your capital used would always be equals to your contract price times 100, right? Times the number of contracts in this cell. Yes? Boom. So that would be your capital used. right? Okay. And then your profit and loss here would be dependent on the price that you sold your contract, right? Okay. So let's say, move this over one more time. Price contract sold, right? And let's say you bought this contract $4 and you sold it at $4.50, right? Okay, perfect. We can definitely remember I'm building the bare bones out here, and I'll probably take 5 minutes more. What I'll do is offline I'll simplify the sheet a bit more, and then I will show you guys how to simplify it even further. So you're doing the bare bones here, and all of this, what you're going to do once you're done with it is you're going to say, okay, I have too many things here. How can I make this more efficient? Okay, that's what you're going to do. All right. So we'll work on that, and after we do that, then I'll show you what I mean. So then the price you sold the contract and total let's say what is the word that I want to use here? Equity. Yes, equity. This is how much your price contract that you the contract price is. Oh wait, actually instead of price contract sold, we can just go current contract price. There you go. Boom. Okay, and then equity, and this will always be equals to this multiplied by 100 multiplied by the number of contracts, right? There you go. And so then your P&L is very simple. This is your equity minus your capital used. Boom, right? And so this now will require conditional formatting. And so we do greater than 0. We'll do fill up green, right? Okay. We'll do equal to 0. We'll do fill up red. And we'll do, there we go. Yeah, actually, that's just enough, right? So now if your equity is at 700, see what happens? Okay. If your equity is at 900, it goes profit. If your equity is 1,000, it goes profit. If your equity is 500, it goes boom, right? Okay. It shows you what's your P&L right away, okay? Okay, and then your P&L percentage, right? So what is your P&L percentage? This equals to your P&L, your profit, divided by your capital used, right? Okay, and this is going to be always in a decimal, so you got to convert it to percent. All you do is hit percent here, and we'll add a couple more decimals, right? So 12.50%, that's good, right? Okay. Let's format this one differently. All right, there we go. And your win rate will have to be like a function, right? Your win rate will have to be like a function. This will have to be like a sort of a if function. I'll figure out the formula for this one a little later, right? Maybe we can do, instead of win rate, we'll do win rate percentage. Oops. Win rate. Win rate percentage. There we go. Okay, cool. Now you have the basis of a fully functional Excel calculator, okay, for your entry. So what we'll do here is we'll do planning phase, right? Okay, and what you can do here is create a nice little box, and we'll call this the planning phase, right? And then we'll have the active trader phase, right? And we'll do a box for that as well. Okay, cool. And this will all have a box around it, right? This will have a box around it, and your risk to reward ratio is going to be a box on its own. Oops, definitely hit the wrong thing there. Okay, your risk to reward ratio will be in the center like a seesaw. Okay, and so then actually we'll just, yeah, okay, cool. We can actually move all of this down if we want, make it a little neater. There we go. Cool. Your commission price, yeah, okay, contract commission price, that's fine. Cool. We'll do commission price here in the separate box there. Maybe we'll move everything down just, oh no, okay, never mind, we won't do that, never mind. Okay, so perfect. Now let's say you take a trade today, right? The first thing you do is you just move this box down, right? And then you enter your number of contracts. How many are you planning to do? I'm planning to do 3. What ticker is it? Oh, come on. Let's say format this the same way. Okay, ticker symbol, this you would have to put in yourself, right? Let's say Amazon. Entry price, let's say, all right, let's just do KWeb, right? KWeb. Okay, entry price, let's say 74.30, right? And then your stop loss, oh, let's see, we need to format everything. Let me just do that real quick so that everything goes in tandem. All right. Actually, these can all be formatted the same way, and this will be formatted the same way together with these. Perfect. Okay. And we'll just do this again. Okay, we should be good to go now. Cool, cool, cool. Okay, now stop loss. Let's say we do 69.80. And our take profit at let's say 85. Oh. Well, that's annoying. Well, see, this is the thing. So we'll fine tune this later. We'll do if errors in here as well, so that we don't get you know, weird numbers like this here. And so then we have, okay, we have a perfect risk to reward ratio here, right? How much was the commission we paid? Right, we paid $1.95 in commission. Oh, this is the contract price, so we'll do, let's just say we paid, I don't know, $5 for this contract. And so then the capital used, so then we'll just do all this down like this. Let's see. So this one's filled up. So this one we fill up ourselves. Oops. Green right here. This will be all green. Current contract price is what we fill in as well, right? So let's say current contract price was $6.50. Wait a minute. Equity is current contract price. Wait, what happened to my formula? Yo, what happened to my formula though? Oh, okay. All right, right. That's good. And equity is something that we would, current contract price. There, this one has to be current contract price. Wait, this should be a formula here. So this is equals to current contract price multiplied by 100 multiplied by this cell here, right? Perfect. So that gives us what we need here. Okay, cool. Now we have a working document that we can work with. Now it boils down to fine-tuning all these errors, right? But this is the bare bones of how you would create a trading journal that you can really use effectively, and a bunch of Excel skills that you can also do. Now, you're going to have to do a bunch of different things here. The first thing you want to do is add absolute values to all of these over here. You want to add a bunch of different validation statements. You don't want these zeros to be popping up, and then you don't want these zeros to be popping up. So we'll have to clean that up as well. But this is the basics of how you can create one, okay? And we'll name this one Trading Journal, okay? So I hope you enjoy that. This is an example of something that you can do fairly simply in your free time. If you enjoyed it, smash the like button. And yeah, let me know if you learned something from here. Let me read some of these comments here. Good morning, T. Last night's opening session was fire. I recommend everyone to sign up and take the courses ASAP. Thank you, Ryan. I appreciate that, man. You know, I'm really happy that you found the course, the first lesson, useful, man. Looking forward to seeing you for day 2, man, tomorrow. This is a really great visual. Thank you, Landon. Appreciate that. You know, I try my best to make it as simplified as possible. I don't like to keep things complicated. You may need to plug in to get these numbers. Yeah, I felt that too. Are you still considering doing a pre-market analysis on a daily basis? Yes, I am. That will come in the future. And is there any way to export data from the firm that you use to fill in custom Excel sheet? Yes, I'm pretty sure there is. It would have to be a plugin though, and you would have to develop that on your own, like on the back end. So that might be a little difficult. But I'm pretty sure that, you know, that should be something that, you know, will be helpful. I honestly wouldn't mind working on developing something like that. Shouldn't be too hard, to be honest. Just learned some cool Excel tricks. Thanks, T. No problem, man. No problem. Absolutely. All right. Awesome. Yeah, that's pretty much all I have for you guys. T, the scalping on this chart looks great. Does this mean KWAP will continue to run? Yeah, possibly. It's a 4-hour chart too, so. Well, on the 1 hour, you can see what's starting to happen, though. It's starting to come down a little bit, right? But scalping is still pretty good, in my opinion. Let it bounce on this resistance over here, and then we can see if it continues to run up here. But it's possible. It could continue. It could, but will it? That's a different thing. Awesome sauceum. Glad you guys enjoyed it. I will see you guys tomorrow for Fundamental Wednesday. We'll do the evaluation of Teladoc Health and a pre-market update. Looking like a possible bounce here on the NASDAQ. I did say sell off yesterday. We sold off, obviously. You know, Livestream's been on point recently, right? We called out JP Morgan last week. Look at where JP Morgan is. Boom, 116. Crazy. All financials, in fact, not just JP Morgan. Look at Morgan Stanley. Look at Goldman Sachs. All three of them just mooned, right? This was the one to watch too. It was pretty obvious. Still waiting for all of these to come down. Market's looking like it might want to bounce here. Possible dual zone right here, which is where we're going to open below. We'll see if we can bounce up here for a little bit and then sell off further here into this you know, little dual zone over here. Those will be the two zones that I'm looking at right now. Yep. Last thing, scalping and Neo is great as well. Do you think it will continue? Nah, this one is crazy. Nah, this one needs to come down a little bit before. Yeah. This one needs to come down. I'm sorry. This one needs to come down. We've blasted through all the targets, man. We've blasted through all the targets with Neo. This is basically a short squeeze at this point, right? Buying puts up here is like a definite payday at some point, right? Just need some kind of bad news to set this off at this point, right? Buying like shorting these shares here would be a pretty honestly smart thing to do, or just buying puts. All right then. Thank you for attending the stream. I'll see you guys tomorrow. Have a good one, guys. Oh boy, I see another question. Do you see Boeing continuing its rally? I would like it to come down first to possibly close this gap before it continues its rally. I think that it will be pulled down to close the gap and then continue the rally. That's what I think. Really overbought here, in my opinion. Super overbought. Okay, that's all I have for you guys. Have the good ones, guys. I'll see you tomorrow. Hasta la vista. Peace, guys. Take care. Love you guys. Bye.